Good morning, traders. It is Tuesday, October 22nd. Taking a look at the charts, we had some pretty good price action yesterday in the markets. It's more so in natural gas. We'll cover that in just a minute. But taking a look at the SP 500, we continue to see the market rise in this kind of wedge here. This is the futures price action where this upper trend line is sloping down. And we talked about this yesterday. There's still some more room for the futures price to go up to test that resistance, that high level. But if we go to the SPY, which is regular trading hours, which is where the majority of the volume is traded, you can see we have an upward sloping trend line. And if we just zoom out a little bit, you can see it's more or less a rising wedge where price is still squeezing up. You could argue it could be some massive running correction and then it blows off to the upside and we see some huge rally. If it does break to the downside, I think we're going to see a very extensive sell-off in price. But the key here is to take a look at where resistance is on the SPY, which means we still have quite a bit of room to the upside based on the markets. And the market loves to make nominal new highs, just like we saw over, there's a high here, and then we made a nominal new high, and then another nominal new high, and then another one. And usually when it reaches these minor new highs, we see some type of selling, whether it's a big sell-off or small sell-off. But usually what we see some type of more significant sell-off. And so the market I could see still going up and breaking this previous high right across here. And it'll hit the headline news and then we could start to see some bigger correction. Our cycle analysis is pointing to a top over the next couple weeks. Could be choppy, could grind higher, but it's still about 2 weeks away before really the overall cycle kind of is rolling over. And we might see some type of double top maybe form going forward before it starts to roll over. So that's where we are in terms of the equities market. It has been consolidating here, kind of chopping around. It could very easily pop and we could see a big move up. And more or less everyone is getting pretty bullish on the markets at this point. If we look at the VIX is down, continues to flounder. There just isn't very much fear in the market. If we see that pop higher in equities over the next 2 weeks, we could easily see the VIX continue to fade down to this blue line. Very significant confidence level. When VIX gets down to this blue line, we can see some pretty strong sell-offs in the market, and then fear spikes up and everybody goes, wow, I wasn't expecting that. But we are expecting that as a technical trader, knowing that when it's down at these levels here, people are not afraid, and when people aren't afraid, they should be. So let's go take a look over at bonds real quick. Bonds up 0.25% this morning. They're trying to grind out a bottom. They haven't quite stalled out yet. They're still stuck under this 5-day moving average, but they're starting to kind of carve out a bottom. And we're going to let bonds do their thing. The main range here for bonds is from this high down to this low. This is kind of the significant range, but overall, not looking to get involved in bonds at this point. We're going to wait for some pattern to reverse and potentially see a new long signal or an inverse, a short signal for the index. And we either get short the index with an inverse or we get long bonds. We'll see which one has the best setup when the time comes between the risk on, risk off assets with bonds and stocks. Now, if we take a look at the chart of gold, gold continues to flag out here, and we looked at the weekly cycle yesterday, and it still shows that we could be another couple months out in time. If we look way back here in gold, look at this price action, you can see here the market put in more or less a big bottoming formation. You could argue it had a cup and a handle. This is also seen as a bull flag, and then it rallied up, and then we put in a bullish pennant formation here, and then we saw another rally up, and now we're back into another bull flag. And this one here we saw 1, 2, 3, 4 months before it took off. The bigger the consolidation, the bigger the rally. This here has been 1, 2, it's only been about 2.5 months. So we still have a lot of time for something similar in length, and our long-term weekly cycle still shows we could see it flag out for another month or two before we start to see the next big leg to the upside. So I am very bullish on metals. This is a nice pattern, but we could still see it grind its way lower and underperform for some time. Looking over at silver real quick, down 1/3%, similar type of price action, just more volatility. It's got a big bull flag. It poked through some long-term resistance, quickly sold back down. And if we look at miners like the GDXJ, same type of thing. They've had a big rally and they're consolidating. They sold off pretty good there yesterday. Our cycles still show more or less sideways to potentially lower prices still for a few weeks. So overall, we are looking for the price to start to reverse and turn up. I am bullish, but not looking to jump the gun just yet, because we're somewhere down into this phase here where it's grinding down, and it's going to make some nominal new lows, have a bounce, nominal new low. Eventually, we're going to start to see it really take off, but it's still in consolidation phase at this point. Looking over at natural gas, let's move over to natural gas. Big down day there yesterday. Obviously, some news hit. And that's the one thing with news, you never know when it's going to hit, and you never know what's going to be good or bad. Trading news is really tough, and just because it is almost 100% random. And news hit natural gas yesterday with the new weather forecast saying it's not going to be as cold as they expected. And of course, money moving out of natural gas as it was anticipating some colder weather. Overall, I do like moves that happen on news, simply because most news-based moves are faded back. So this could have been an overreaction. We'll see if natural gas can get some traction. Again, it's putting in fairly significant pattern here, very similar to what we saw over here. And the key thing here is we're still under this 20-day moving average, which is fairly significant. It's equivalent to where we are here. This let me just get the yellow line here. It's equivalent to this area here where we're stuck under it, and the only difference is here we've got the 5-day moving average forming this nice little kind of inverse bottom formation here, this inverse head and shoulders, and we saw that kind of pattern kind of unfold here where it dropped down and then it rallied up and pulled back a bit. So we're kind of right in this late stages, somewhere right into this zone here. Maybe we're going to be for a rough ride for a week or two as it trades here. And then hopefully we'll see a big pop and a big breakout. This is forming a nice basing formation. Hopefully this inverse head and shoulders can hold its ground over the next little while. And more or less this turns into, you could argue, a little bull flag for it to start to break out and move higher. Taking a look over at crude oil, up almost 1% this morning. It's stuck under this 20-day moving average as well. This big picture here, big down trend with this potential bear flag kind of stuck underneath all this other noise. Fairly ugly chart. Again, the only thing I'm really interested in is potentially a breakdown below this line across here, which is around the 51. We'll see how price starts to unfold here. But overall, it's kind of coiling in a little pattern. It is about to have a big pop or a big drop down to support based on the energy building up in this pattern. More or less, this pattern, if you look at it, got this little kind of squished pattern here. It's very similar to when you get a pattern like this, it gets squished. It's either going to pop or it's going to drop really quickly. And this distance here from the top to the bottom, that is where we're going to see it pop or drop back down to. And this is the critical line in the sand here, down around this 51 area. So we'll see how things hold up going forward. Let's quickly take a look at two leading sectors here. This is the transportation sector. More or less, you can see it's gone pretty parabolic where it's going straight up. We get into these strong moves to the upside, and overall, it is getting into more or less resistance zone. It's had a pretty strong rebound, and I would think it's going to start to top out here fairly soon. So it looks like it's overdone and ready to reverse. And the Russell 2000 has performed really well yesterday. It was up huge, almost like 2% yesterday. Ended up closing back down, but again, similar type of price action. These leading sectors here, kind of near the upper end of the range, they're sloping down, kind of oscillating in this falling channel. And overall, we'll see how things play out. But the markets just seem to be like there's a little bit of room left, but they seem to be getting close to a top, and we could start to see the markets sell off, which is what our forecasting price, our cycles, and analysis is pointing to. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.